Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.org as well as StockCharts.com. So what I wanted to talk about today is, can energy finally stop the slide? And there is some hope that the inventory levels are now starting to catch up to demand, and we should actually be able to perhaps put a little bit of pressure upwards on oil prices with the current inventory levels. And if that was to happen, that might give a move into the oil companies. So the oil companies started to move on Tuesday a little bit, roughly 1%. But what I wanted to talk about was, let's go look at how the charts look, sort the industry, get it all set up so that if this does start to move, we can be in position for it. So the markets are still trying to start another rally, and I want to cover off the reasons to look at the energy names. Obviously, it's a really awkward time here, and I'll get into it in the charts right away. If you like the work that we do, I'd be happy if you could come over to ospreystrategic.org and just take a look at our trial offer for $7 and see if there's anything there for you. Hopefully all the analysis we do helps you out quite a bit, and we try to help you understand the backdrop of the market and what we're looking for to see the market improve. So with that, let me just roll into the charts. So I'm going to start with the Nasdaq 100 on the left and the S&P 500 on the right. Now this chart here is 15 days, each one of them. And then what you can do on the gallery up here, you can do a drop-down menu. I've selected the star here to make gallery view my default. I've put in QQQ and SPY, and then it allows me to compare the two charts. Now, the one thing that I want to show on this chart, as you can see, the Nasdaq has rolled over and given us a PPO sell signal, and the S&P 500 has not given us a sell signal just yet. It's close, but it's sitting right there. Now, perhaps it's just going to turn and break higher. That's what we're watching for, is to see which way this chart wants to go. Now, I'm pretty sure we could all draw a trend line under here and get a feel for exactly why the market probably bounced where it did today. The Nasdaq, on the other hand, had a trend line going steeper to the upside, and that had broken. We're testing the 100 period moving average on the 1 hour chart, so not a big deal. But when we get into the daily charts, this is where it starts to get a little bit more interesting. What we see on the Nasdaq is it's trying to get through that February high, and we have spent a while here. Really, we were up in this area, I'll call it March 21st, and then here we are on March the 27th and 28th, trying to get through it this week. We started higher and closed lower, and then we started lower and closed lower, closing below yesterday's low. So that's one of the weaknesses we see on the chart. But the real question here is, do we have the horsepower to get through this? And that's what we want to watch for. And the volume's been declining meaningfully over the last week, really from the options expiration day on the 17th of March, St. Patrick's Day. We had big volume on the Nasdaq and on the S&P 500. It doesn't really show on the ETFs, but on the actual indexes, it was pretty big, and I can go get those charts in just a second. But the one thing that I really want to pay attention to here, really since last November, have we made any progress? No, we're pretty much where we were, call it November 17th, and we're sitting here at the end of March. So we're right in the same range. Now, in early February, we ran higher, and then we've been trying to rally off this low for 2 weeks, but it's been tepid. We're still below the 50-day moving average, and we've been trying to test it really since the first week of March and haven't been able to do much. So we're sitting there, but we have found support around the 200-day moving average. So watching that very closely. Now, when we go over to the Nasdaq, obviously, this is what we would call a bullish chart formation. And the reason is the 20-day is above the 50-day, is above the 200-day, and that's in the normal sort order of an uptrend. So for me, that's a pretty bullish scenario. Now, the real problem is anytime you're testing a prior high, you want to make sure you break through. And so when we looked at the S&P 500, we got to the February 1st and we literally shot up. And I think this is on the Fed meeting. And then we rolled over and basically we spent 6 months going down, or 6 weeks going down till the next Fed meeting pretty much. And so we're watching to see which way this market can get going. And I think the bigger issue is, we're struggling at the prior high here. And over here, we tried to break out and then we really didn't have any momentum. We tried a couple of stabs higher and the chart just seems to be waning. Now, for me, there's two pieces of information shown on the PPO, and what you see here is we had a higher low while the market made a lower low back in October, so that was a really nice bullish divergence. We ran up, we wobbled around in early November, then we ran into the high in December, then we pulled back to the low in January, rallied to the high in February, and have pulled back. Now, the problem is on this most recent pullback, you can see that the S&P 500 never really got going, whereas the Nasdaq spiked meaningfully. And what happened was the Nasdaq was actually up almost 8% in 2 weeks, and yet the advanced decline data was saying not a lot of stocks participating. And we know that the Nasdaq 100 is made up 53 or 54% of it right now is the top 7 companies. So it's a really select group of companies that have been leading that market higher. And now those charts have started to slow. I don't want to say stall, just slow. And so what we need to make sure of here is that the market does get this rally started. So one of the things I'm looking at is I can draw a trend line under the Nasdaq here. And if I just go get my charts, when we look at this, what I'm looking for, Nasdaq today, and then what I'm watching for is this particular trend right here. And what I don't want to see is this make a lower high right here on the PPO while testing the prior high. What we call that in technical analysis is negative divergence. And this has not crossed its signal line, but let's just say that by Wednesday or Thursday of this week, if it started to cross, we'd have this downtrend line. So what happens is momentum on the second high isn't as much as it was on the first high, and it can take a while to get going. So you don't want to be standing there like, using a clock or something. We're literally looking to see if the market can build strength here. But what we see is a very rapid decline in volume. And if you look at this volume, it has the lowest interest going all the way back to mid-December, with the exception of right around year end. And so really, we're seeing no interest in pushing the market higher, but we're also seeing no interest in selling the market off. So it wasn't like we, really got a big thrust in volume or something. But we're definitely seeing a decline, and this light volume, again, if you ignore the Christmas period just because of vacations and all that, we're back into the early December timeframe, if that. Let's just put a line on it. Today's volume was roughly 779 million. So we can go down here. I'll have to close out of my annotation tool. Sorry about that. Go down here, and then I'll just zoom back out. And what we'll see here when we add this volume line, so on volume here, this, when you put a number in here, this makes it the 50-day moving average of volume, or 50 period. And I'm going to put a horizontal line, and I think the number we had for the volume was 770, call it 779 million. So 779, and we'll just make it blue. Whoops, there's something else going on there. Delete. Okay. And so now what we should see here is this line for today's volume. And really, it was pretty timid. Again, the Christmas period, Thanksgiving weekend. And then the last time we saw volume this light was in September. And I think we know what happened there. We tried to rally, failed, and then the market pulled back relatively hard. And the same thing in August. We had a big uptrend going, and then we started to decline in volume. And just lost our power, really. So that's what we're watching for, or what I'm watching for. That's one of the big trends for me, is to try and figure out if we're going to see some buyers step up and show up here and get this party started. And if they don't, I think what we need to worry about is if this PPO trend line, which I like to think of as rising waves, and basically on each wave you get more interest. Now, if we open this chart up just to make sure people understand the difference, when you're in a bull market, typically the PPO stays above zero, and it looks pretty good. And then when we got into the bear market of 2022, we kept dipping below zero. So we'd have rallies above, but then when they fail, that was a big deal. So we're right around 1% here. And you can see here we had the market tried to make a high. We had a lower high in relative strength or momentum on the high at January 1. So the market was testing its prior high, much like we are now, but we had a lower high going on. And again, volume's tricky around the end of the year, so we couldn't really use that as a gauge. But the one thing I would just say is we definitely had that divergence in place. And we also did back in the July to September timeframe, where you're making a higher high in price but a lower high in momentum, and then we get that market pullback. So what we're worried about, or what I'm worried about, is that the market is starting to show signs of weakness. First of all, no volume, not getting pushed up, and then this uptrend in momentum is starting to wane. And when I start to see that, that's one of the key signs for me. Now, the Nasdaq at least is above zero, right? It's up here around that 1% level. This is where we rolled over in the November timeframe, trying to get through the prior highs and rolled back down. And again, in March, April, we got up to about almost 2%, but we rolled over there. So the market is struggling here, and that's the real concern. And are we just going to whoosh lower? I don't know about the whoosh part of it, but let's just say we're struggling to find buyers showing up at this price point. So, and again, here I used the Nasdaq 100, and you can see the volume that soared on options expiration day. And then if I go to the S&P 500, what we see there is we had huge volume, and it was bigger than any volume day during 2022. But again, we see the volume sliding off dramatically where nobody's really kind of interested. And in this particular case, it goes back to the beginning of the year. And we did have some volume in November, December, kind of around this 2 billion level. So I would just say the volume's very slight here. And we didn't sell off as the market tried to go down today, but we sure didn't punch higher. So all of these things are adding up. Now, remember how the Nasdaq had an uptrend in momentum? Well, this isn't trending higher. It's basically got a dip here below zero. And what we want to know is, are we going to turn back up and have another rally, or are we going to turn lower like we did, say, in June, and the market kind of rolls over quickly? So when you get your PPO momentum indicator rolling over below zero, that's typically not a very good place for it to roll over, and we see the market kind of drop quickly. So that's one of the backdrops, the things that I'm looking for on this chart is, can we finally get some interest, some push to go higher? And I don't think we do. So that's one of the cautionary tales I've got here. So now when we look at the USO and the XOP, USO is an ETF that basically tracks the price of crude. And then that's the polite way of saying it, because it's using different time scales and stuff to handle near month contract expiration, all that kind of stuff. So I'm just going to call it a rough crude tracking vehicle. And then we have XOP, which is the exploration and production ETF. What we're seeing on that one is the market is trying to get through the prior highs of last week. And so we've made a low, we've gone up, made a high, now we've made a higher low. And today, on Tuesday, we made a higher high. So there's some hope here that things are starting to improve. Now, when you look at the chart here, the one thing I would say is the 64 level on USO we're trying to get back above it. So when we broke below it, so we would call that support. So when that line gets broken, we've lost support and now it becomes resistance. So now what we want to know is, do we struggle here to keep going, or does this roll over? And if it rolls over again, that's probably really bearish. And it would, to me, oil's an economic indicator. So if the oil market senses that America is going to start seeing the recession coming around the corner, which is really what I think this whole downtrend's been about, we haven't seen the strength in the price of oil. But what we want to know is, if we're starting to see some tightness in inventory, will the oil price perk up? And will the exploration and production companies finally start to get going? Now, some people might say we've missed the rally, but that's hardly the way I think of it. What I like to look at here is, I want to make sure that on this rally, as it starts to perk up, so here we've made our higher low and we're making up and we've got a higher high. We're still below the 20-day moving average. So it's not like we missed this trade, but we are getting to a place on the charts where we'd like to watch it. Now, remember how on the Nasdaq, the momentum indicator, I had drawn an uptrend line across these lows, and then we want to make sure that holds. Well, now if this hooks down, that's a problem. On energy, we have exactly the opposite. We have a downtrend line off the prior highs, and now what we want to know is, can we get through that? And if we could, that would be a bullish change of texture. So instead of continuing to make lower highs in momentum, we'd finally start to make a higher high and push up. So we got a PPO buy signal on Tuesday, and that's the first one we've had since early March 1st, let's say, and that one we rolled over right under zero. So if you remember the caution I mentioned about the S&P 500, what we don't want to see it do is just roll over right under zero here. That would be a problem. When we look at XOP, when it rolled over just under zero, it kind of lost ground very, very quickly. And now the real question is, if the overall market can hold, can we see the oil stocks start to rise up? Or even if the overall market starts to drop, can we see the oil market hold? And I'm a lot less comfortable with that second scenario, but I'd be willing to watch and see if we can do that. So anyway, from the oil perspective, what you see here is the weekly charts. The PPO's been tracking right around zero for 6 months for oil, and for the exploration and production just recently started to go below zero. Again, that downtrend in momentum. Now we'd like to see that turn higher, and if it was to take off to the upside, that would be a lot more bullish. So we continue to watch that. Crude oil just recently made a new 52-week low, so that's a pretty big statement about oil demand, and that's one of the main concerns I have is, if the overall economy starts to tip, is everybody going to rush into energy stocks? Probably. I would struggle to think that that's the way that's going to work out. Anyway, so that's one of the things we're watching for. So with that, that's kind of where the backdrop that I want to talk about is that improved PPO momentum. If we could break this downtrend and start to actually break back up above it, that would be more bullish. Now, the real question is, if the overall indexes break down, can we do that? So I don't have an answer to that. So one of the things that I would do is I would try to get all of the energy stocks. So I have a chart list called Energy, and it's basically 230 stocks all in the energy sector, and they could be drillers, or they could be exploration and production company, integrated oil companies, whatever. The whole group is in here. There's and they have a price minimum of $1, I think. Anyway, I still got some in here below $1, so I've got some 20 cents. So again, the idea here is to try and make sure that we get a broad smattering of the index or of the industry group, and then start to go look at the charts. So I'm going to use the scooter ranking. So again, once you've got your chart list, you could sort it in any order you want. You could either sort it by volume or sort it by scooter ranking. So if we sorted it by volume, you can see rig had some of the biggest volume in the last on Tuesday. Occidental Petroleum, that's the Warren Buffett, big investment in their Imperial, Southwest Energy. So you've got some real big volumes going on here. This is, 9 million for Energy Transfer Limited Partnership. There's a big variety here, but the more important thing for me was now I'd like to hold these in this sort order. If it's volume or whatever, I'm going to use the scooter ranking. And again, because I like to see all of the stocks, the strongest ones first. So I'm going to say number in sorted order. And you do that by just scrolling to the bottom of the page. And then after that, so it's going to put a number in front of all of our company names, and then that's going to allow us to go in and look at the charts. Now these charts are set up on a daily chart, so what I would normally do is I would go and get the chart on a weekly basis and go and take a look at it. For now, I'm just going to leave it just to give you an idea of what I'm looking for. But here's RIG, and again, it's trying to make a move off the lows here. Maybe what we should do is just get a little more focused on today's price action. So we'll just do the last 6 months or 9 months instead. We're going to apply this style to all, and by doing that, what will happen, I don't know if I hit that button, I thought I did. What I want to do is try and get all of the charts set up like this, and when we look at the charts, again, what are we looking for? We're looking for, first of all, that it's holding its prior lows right around there, and now we want to start to see it turn and work its way higher. So that's a positive. We're starting to get a PPO sell signal on this one, and again, we'll probably need to view them all just to get a look at them. And again, the purpose here of the Market Buzz isn't to go through all these charts and kind of hand deliver all the charts that look good. It's to show you how to manipulate the charts and get them set up so that you can go look at them. And so here's the view of these charts. And again, we've sorted them by scooter ranking. So this black line up at the top is the scooter ranking. In behind in purple is the relative strength compared to the S&P 500. And again, we had a downtrend here. I like to see that breaking, so that's a positive. Now, when we look at, here's another drilling company trying to break out to new all-time highs. That looks pretty good. And then here we've got Vista Oil and Gas, and it's trying to break out to new highs. So that looks pretty nice. NGL, this one's usually natural gas liquids energy partners. So that would be a surprise to me. Actually, a surprise that the chart's trending up at all because natural gas is so beaten down. So perhaps they've diversified into more oily names. But anyway, you've got a downtrend. It's trying to break that right now and get going. Riley Exploration Permian. So here's a good example. So you've got a high scooter ranking on this chart, and it's sitting right near 52-week highs, but hasn't really been able to do anything. I mean, you could have missed, from March 1st of 2022 to now, and missed a whole bunch of pain and just been sitting at the same price point. So if this chart was to start to break out to $36 and $38, at least you're buying a breakout to new highs, and you have a reason to start looking at it. Again, here's your PPO with downtrending momentum if that's going to start to break higher. I like that. And here's Tidewater. This chart's actually trended up quite nicely, even through the pullback in the price of oil over the last year. Remember, it made new 52-week lows. And the chart is sitting roughly where we were at the beginning of February, and now it's trying to break through this $46 level. PARR Pacific, Dwight, who works with me, has been posting this chart a lot, and it continues to show promise, and it looks to me like it wants to break out to new highs again here after chopping sideways since mid-January. So a little 2-month pause and perhaps ready for its next leg higher. Weatherford, big uptrend, pulled back and now wants to start to turn higher. That would be interesting to see if it can do that. I can't even pronounce the company, so we'll just move on. Helix Energy Solutions, again, this chart right around where it was at the beginning of the year, so we haven't missed anything. If it's going to start to turn, that would be nice. Oceaneering International, same idea here, a big pullback, trying to build a base here and go higher. I don't like the fact that it made a lower low, but again, if all these charts are going to start to work higher, that would be better. Marathon Petroleum sitting right around $135 and looks like it wants to ride up. So I think you get the idea. Some of these charts, especially the strong ones, look like they want to start to work. Here's Hallador Energy, and it was tilted down. It's now making higher highs and higher lows since roughly middle of February, so that's nice. This one, I guess, is the low in March, but starting to work its way up. And again, had a nice uptrend in all of 2022, started to drop in December, so we'll see if it can fire it up again. KLX Energy Services. Again, a lot of these energy services names seem to be marking the top of the list. TK Tankers, hauling crude oil around the world. General uptrend, so that looks okay. Anyway, the idea is to go in and look at these charts now, and if you think we're going to get a breakout in oil, and again, if you look at the oil inventory data, the expectation is for us to have a draw of roughly 10 million barrels out of the U.S. oil inventory tomorrow. Some of that will be gasoline, distillates, crude oil, but in general, we expect it to get a little bit tighter. So with all of that, that's the backdrop. We've got a very tight situation here, trying to figure out whether or not the markets can go higher. And again, I'm a little concerned that the volume doesn't seem to want to work. And then even if the overall market does start to go sour, can oil and oil stocks start to rally on their own outside of the main area of the market? So we'll see. Again, really interesting times here. The market's been struggling for about a week, and we'll find out probably by the end of this week if it's got any momentum. So thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern Time. You can also see the recording on StockCharts TV YouTube page. Thanks, everybody. Have a good week. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.